What's up guys, Donnie here. So this video was a little depressing because I'm gonna explain to you how this one mistake I made in the stock market cost me $600,000. And this is not a made up number. This is a real number that will cost me $600,000. I want to make this video so that you don't make the same mistake as I did. As new investors, as non-investors, this is a pitfall that so many people find themselves in, and I don't want you to make the same mistake. So quick reminder, I am not a financial advisor, so please make your own decisions, do your own research, but let's go ahead and talk about this. So before I get into my mistake, I want to show you my current position in the stock market. I'm going to put up a investing calculator here on Dave Ramsey's website. So here I've populated the current parameters. My current age 33. When I plan to retire around 60, you can make that lower, but this is for our purposes, okay? So my current portfolio stands right now at about $110,000. So let's pretend that I'm not going to contribute anything on this anymore until I'm 60. And we have a regular annual interest rate of 10%. That's pretty much the average interest rate for the stock market, especially if you follow the S&P. So let's calculate what happens here. Okay, so when I retire at 60, we are going to have a growth value of $1,508,000. That means without touching the initial balance, without adding anything, the portfolio when I'm 60 in 2047 is going to be $1.6 million. Okay, that's 93% growth. That means only a tiny, this much is what I initially put in. Now, I am a responsible investor, right? I'm adding monthly. Let's say I'm doing only the $500 additional monthly for the IRA, which is what, $6,000 maximum for the year, right? That's the cap for an IRA, whether Roth or traditional. So if I add $500 per month after age 60, okay, I will have contributed a total of $162,000. But that has grown to $2,400,000, okay? So by adding $52,000, I've grown this by 100 from 1.6 million to 2.4 million. That's $800,000 in growth from adding 62,000. Now, where did I get this $600,000 mistake from? Okay, the thing is, I could have started when I was 18, right? So let's get a new calculator. Let's pretend just from 18 to 33 to my age, okay? Let's pretend I still have my 110,000 when I turn 33, but in addition to that, I started putting in $100 per month in the stock market, okay? Starting from zero, $100 a month at 10% return from 18 to 33, we'll have made $41,446. That's $18,000 in contribution, $23,000 in growth. Now we'll add this number to this number, okay? That's what it's 51,446, 151,000. Let's pretend this is zero again. Now it's $2,076,000 in growth, okay? 2,284,000 minus this equals $609,000. So because I didn't start at 18 and I did not contribute $100 a month to the stock market, I lost out on $600,000 by the time I retire. That's a crazy amount. That's $50 per paycheck. That's all it is. Okay, now imagine if we were to change the, of course, I'm still adding my regular 500 now. So this is what we actually have if I started doing that at age 18. I would be at $3 million. And this is not doing anything special. This is just investing in the stock market as a whole, at an ETF, an S&P 500 ETF, just one stock, okay? And this includes, of course, remember, this annual percentage rate includes stock market crashes, includes corrections, all of that. So even in addition to that, if I were to never take the money out until I was 60, 2.7 million in growth, 3 million total by contributing a total of $162,000. Where are you going to get that? Okay, I know there's real estate too, but that's a different beast. I'm not going to get into that. This is for a stock market. $162,000 becomes $3 million. Now imagine, okay, imagine you are starting at zero. Let's pretend I didn't have $100,000, but I decided to start now from scratch. I'm gonna do the $500 maximum monthly, which comes out to $6,000 per year, just to even it out over the course of the year. Okay, so I'm not spending $6,000 in January. We're gonna calculate this. We're gonna spend $162,000 for 27 years, and we're gonna make $660,000 just from that. Okay, imagine if you did the same thing starting at age 18. 18 to 60. You will, look at this, 3.8 million. You end up way higher than where I was. This is why I put that 110,000. I put that into the market over the course of 2 years, the last 2 years, because I was trying to catch up to 18-year-old me who started investing, okay, at $500 per month. That's a lot. That's most of your paycheck, but what are you doing? You're probably living with your parents anyway, right? $500 a month. At 60, you're 3.8 million. 3.8 million. That's ridiculous. So if I did the same, I am nowhere near that. Where am I? 64,000. So I'm at 2.4 million. Okay, that is a difference of $1.4 million starting at age 18 versus age 33, and with me at $110,000 at my age. That just goes to show the power of exponential growth. It's ridiculous. Okay, 10% average. If I were to start, let's see, here's the difference. Okay, where are we? So I will have 822,000 if I started today at zero, and that number is right here, 2047. That means this amount of growth from here to here. I'm not touching that. I cannot get that time back, and I don't want to retire when I'm 80, right? This is a real amount that you're never getting back. That's why I'm telling you guys to start investing now. Start now. You have money in the savings account, whatever you don't have for emergency funding, throw it in the stock market. If you don't need it for a big emergency, if you're not going to put a down payment for a house or something, throw it in the stock market. ETF, S&P 500 ETF, VOO, VOO, SPY, I like VOOG. Just throw it in there because you're missing so much of this growth. It's ridiculous. Look at this. This guy is going to be a millionaire. This 18-year-old is going to be a millionaire in 2049. How old is he in 2049? He's going to be 40, 41, 49. He's going to be 47, and he's a 47-year-old millionaire just by adding the lowest amount, the maximum for the IRA every month, $500 a month. That's crazy, guys. So this is my mistake. I wasted 25 years? No, 15 years not being in the stock market. This is why they say time in the market beats timing the market. Okay, you can't time the market. You don't know when it's gonna go at its lowest. You don't know when it's gonna go at its highest. You just get in the stock market. That's all you have to do. Get in there. Invest in an S&P 500 ETF. That's all you need to do, guys, and you will be financially free by the time you retire. Guess what? You don't have to do just 500 if you have a lot of money to spare, but you're not putting it in. You're just saving it. It's wasted money. It's lazy money. When you put it in the stock market, it is money that is working for you. Okay, and the faster you put it in, the faster you'll get your returns, the faster you'll be able to retire early, the faster you will be able to fund your kids' futures and all of that good stuff. Okay, use it for yourself, use it for your family's future, and enjoy your life. But remember, money is not everything, but it helps a lot, right? So get in the stock market, guys. That's all I can really say. Just get in there as fast as you can. If you found this video helpful, please share it with someone who you think will find some value in it. I would also appreciate a like and the subscribe. Just gently tap that like button because it hasn't been touched that often, so just be gentle, okay? Just tap the like button, tap the subscribe button, and then tap the bell next to the subscribe button. That'll really help me grow the channel. Please don't forget to check out the links below. Robinhood, get 1 free stock when you sign up. We will get 4 stocks with up to $1,600 when you deposit $100 or more, and M1 Finance will give you $10 credit when you deposit $100 or more to the account. Get into the market, guys. Look up get an IRA started, get a 401k started with your employer. Do whatever you can to get on the stock market. All right. Thank you so much, and we'll see you in the next video. Bye bye.